So it is time to prepare to trade the best setups at the best prices. I have a very simple, lucrative trading game plan for you as the market has hit new all-time highs once again. I'm going to be explaining to you the best levels possible to be trading at in the key game plans to be buying put options to make money as the market's about to drop and reverse, and also the key break and retest oversold levels on where we're planning to buy call options. I'm going to walk you through all of the game plans, all of the trade ideas that I have for you. In terms of the end of this video, I'm going to be breaking down the trades that we ended up making on the day. Wednesday was absolutely insane, man. G-Roar ended up having 3 massive wins and ended up adding to the winners to double the gains. In terms of my own personal trades, I ended up going 2 for 4, 2 wins, 2 losses. I'm going to be breaking down all the trades towards the end of this video, man. We had an absolutely insane call on this overall bullish close. It's just in terms of the timing was a bit off, but 2 of the strikes ended up hitting and we added to the winners, which helped, but the other 2 strikes did not work out in terms of my own personal trading. I'm going to be breaking down all the trades, explaining to you in terms of what I was seeing on this overall bullish close. But first things first, let's get into the game plan, man. So in terms of the game plan, this is what I want to bring awareness to. The SPY is still considered overall bullish, and a bigger bullish move will come. Now, based off of the daily chart is stating, I went back throughout the daily chart pattern, and what it's stating is this. There's going to be 2 key levels for put options. The first level is going to be 655. So let me explain to you the most likely outcome, heading into today here. The most likely outcome would be that the SPY either starts to pull back towards the previous day highs. If not, then it pushes a little bit higher in terms of how much is a little bit higher. I would say in between the range of 657 to 658, right around 2 to 3 points above the previous all-time highs. But the point being is it's going to try to top at one of those levels. Previous day highs or 2 to 3 points above previous all-time highs, right? So with that being said, you're going to want to be looking for scalping opportunities on puts. If you're trying to get in at the exact top, wait for the first red bearish 30-minute candlestick confirmation, or you can wait for red, green, red bearish pattern, red, double, green, red, or just, major resistance forming for 1 to 2 hours. Just look for the bearish confirmations at previous day highs or 2 to 3 points above the previous day highs, right? If you're not seeing the confirmations at previous day highs, SPY starting to break out and retest, I wouldn't really encourage calls. I would just wait for an opportunity for puts, but just be a little bit careful in terms of the puts, because within time, the market will be pushing higher and a bigger upside move is expected. It's just in terms of the most likely outcome. The most likely outcome is saying that we are due for a pullback, but in terms of this situation, it's literally into thin fucking air. We're literally sitting at all-time highs. So in this particular situation, I would encourage you, if you're going to try puts, to wait and use the best confirmations possible if you're trying to capture the top. And you don't have to try to capture the top. The other way to do it is to just wait for the top to sink in. So for example, right here, SPY was forming resistance, for hours right here from pre-market to early market session open. And then you had a red, green, red bearish pattern. Then you had a breakdown. SPY went under this support, breakdown, retest, red, green, red, breakdown, retest, red, green, red. Buy the puts, flushes harder, right? Red, green, red, buy the puts, flushes harder, right? So if you like, you can just wait for the SPY to form the first red bearish 30-minute candlestick confirmation, wait for some resistance to come in, wait for bearish patterns to come in, and then once you've identified that a support channel has cracked after those bearish confirmations came in, you can try a quick put on a breakdown retest. When it cracks support, spikes back up and retest, you could try to puts, right? You can also try to get in towards the exact peak at previous day highs or 2 to 3 points above previous day highs. The market should have at least some small pullbacks the first time previous day highs and 2 to 3 points above previous day highs is tested. That's the most likely outcome. But you really have to use confirmations in terms of this trade idea. It's going to be very important. And it's likely best to do a two-step. First step is bearish confirmations at one of the levels I gave you. And then second step is, instead of trying to capture the top, wait for a breakdown and retest. Wait for a support channel to crack. When it spikes back up and retest, buy the puts on the retest, especially if you're seeing bearish confirmations. That would be the safest way to play it. And the reason why I'm saying that, especially for those of you who are more beginners to consider that, is because the market is expected to have a bigger move. The most logical situation headed into the market today is we should see some small pullbacks, even if it pushes higher at both of the zones I gave you. But within time, it's supposed to have a much bigger breakout to that 660 range, and sometimes things can happen earlier than expected, and sometimes things can happen, later than expected, which is why I just be a little bit cautious in terms of buying these puts into thin fucking air. And I would recommend two phases. If you're more of a professional, then just go with the first phase. Once you're seeing bearish confirmations at the top, try to capture the top. If not, then do the breakdown and retest once the top has captured in, right? Whatever works best for you. If you're good at capturing reversals, capturing tops, then just use the bearish confirmations at the levels. If you want to wait for the top to settle in, and then you like using the breakdown and retest strategy, right? So if you're trying to capture the top, red, green, red, resistance for hours, key resistance level, buy the puts, right? If you're waiting for the trend to flip bearish, okay, trend flip bearish, support cracked, retest, red, green, red, buy the puts at the lower level and the breakdown retest. Your choice. You should know what works best for you and implement both strategies, test and experiment with the overall levels and confirmations and figure out what works best for you as an overall trader. So that would be the recommendations in terms of puts. The most likely outcome is market tries to drop at previous day highs in 2 to 3 points above previous day highs, rather than having this massive breakout right away to 660. Now, within time, the market is going to try, so I'm going to show you some moves right here. These are the most likely outcomes, man. So look at this pattern right here. You see how we have this like triangle, middle finger type shape right here. We have this triangle, middle finger shape right here, right? When it spikes back up towards those previous day highs, it goes a little bit higher and then it just sells off. So another thing you can do is, if SPY pushes above the previous day highs, you can then wait for it to go back under 655, react as a resistance, form a resistance below 655. Then you can do the puts, right? So if it's just breaking above 655, wait for it to go under and react bearish, then do the puts. If not, aim for a higher level with the best confirmations. And you can do both. The higher level with best confirmations would be 2 to 3 points above previous day highs, 657 to 658, right? So again, the most likely outcomes are something like this, where it has this triangle middle finger, it starts to spike back up towards previous day highs. Maybe it pushes a little bit above, then it drops back down, right? And then another, similar situation in terms of this overall pattern that I'm bringing to your awareness here is, there's just been so many similar moves like this right here. It has this similar, like triangle, middle finger pattern, triangle, middle finger pattern. And then in terms of this situation, let's see, it went from 648 to 649.66. So it had a 1.5 breakout, then it started to flush again. So again, those are the most likely outcomes in terms of the short term. But you need to be aware that the market is expecting to have a bigger bullish breakout within some time. Likely not right away, but I'll keep you updated, right? And in terms of determining when that's going to happen as well, like I said, it's likely not going to happen today. But, in terms of determining when that's going to happen and what the move, in terms of this bullish move would look like, this is what you have to be aware of. And again, this could happen earlier than expected. And if it does happen earlier than expected, whether that's today, we will determine that. We will confirm that. And if we did do puts, we'll switch on calls and we'll make it all back and more by adding to the winners and making bigger gains than we lost on the puts, right? We're going to fucking bank. And even if you did the puts, you can still potentially profit if this big bullish day comes in, because the market will attempt to drop first regardless at the levels that I've given you. So if you're scalping, getting in and out, not going too far out of the money, that's another thing on puts. If you're going to do it, I wouldn't go super far out of the money, because it could be a situation where It's a smaller scalp, a smaller win. And in order to print that situation, you need to be at the money or closer to in the money, barely out of the money, right? So I wouldn't encourage going super far out of the money on put options. But another point I want to make is, and again, this can happen sooner than later, right? But we're going to be green regardless. Even if we're wrong once about the trend, look, if you know how to trade the trend with the system we use, which means you make bigger wins percentage-wise and you add to the wins to double to triple the gains, right? If you know what the fuck you're doing and you're trading the trend, you can be wrong about the trend 2 out of 3 times, and then you can add to the winner, ride the trend, make over 100% plus, and you can recoup those losses with a 33% win rate. So regardless, with our systems, we will be fucking green today, and the market is setting up for a highly predictable, lucrative trending day, right? But within some time, this is what's expected to happen. So in terms of this overall move, right, this is what I want to bring awareness to. So, think of this overall, like triangular shape right here, triangular shape right here. And then once the market starts to gradually break above those previous day highs, and all it's doing is consolidating for hours above these previous day highs right here, that's when the big move is going to start to occur. So if you're seeing that the SPY is breaking above previous day highs and it's just consolidating for hours and hours, green, red, green, green, red, green, green bullish floors, green bullish wicks, right? Strong green bullish wicks above previous day highs, starting to break above the new resistance that forms in the pre-market during normal trading hours, and then it breaks out and retests. That's when the big move is going to happen in terms of this call option idea with the breakout that's expected to happen within some time, likely not right away, but it is possible it could happen right away. So again, if you're seeing a channel that is forming where the support, the higher support, is above the previous day highs, right? And then you're going to see there's some sort of resistance level, right? So it breaks out, then it drops back down towards previous day highs. If it's just maintaining above the previous day highs, there's no reason for puts, If it formed a roof in a ceiling and started to drop under, and then the trend flipped from bullish to bearish, then it'd be a fake out and you'd want to be doing puts. But the point being is, if we just break above 655 like this and then just form a higher floor and just hold for hours and hours and hours, green, red, green, multiple green bullish 30-minute candlestick confirmations, green bullish wicks, right? And then you're seeing a break above that resistance level, wherever that resistance level forms, right? In terms of measuring it, let's say it forms, like $1 or $1.50, $1.25 to $1.50 is realistic in terms of previous day highs. Let's say it forms at like 656, right? SPY breaks above 655, forms some resistance at 656. All it's doing is forming higher support at 655. Once it starts to push above 656, breaks out, retest, forms a higher floor above that previous resistance, green, red, green, green, double red, green, bullish floors. That's when this massive fucking move is going to occur where the SPY is going to spike 4 fucking points. Within some time, it's going to happen and we're going to see 660. The quickest tell in terms of when it will happen is a clean break above 655, goes to 656 plus, drops back down. All it's doing is consolidating, forming higher support at 655. And then once it starts to break above 656 plus, wherever the resistance was on the overall channel, right? Likely a 1.5, 1.50 breakout resistance, breaks out. If you see a retest and higher support with bullish confirmations, get in on the higher fucking level, man. And then in terms of puts, if it starts to go under 655, breakdown, retest, reacts bearish, then try the fucking puts, man. That's the quickest tell. So it's going to be very fucking simple, man. Tomorrow's going to be a simple, lucrative trading day to make money and likely to be making money trading both ways. And you got to be very cautious and be very aware of that expected move because within some time, we are expected to have, a bullish breakout like this. And it's so easy and simple to determine what it's going to look like. You just identify the channel with the levels I've given you, look for breaks, look for retest, look for higher floors, look for consolidation for 90 minutes to 2 hours, look for green, red, green, green, double red, green, bullish wicks, look for all the bullish 30-minute candlestick confirmations. Go back and study every single fucking bottom before a massive breakout on a break and retest throughout the past 10-day, 30-minute chart, and you'll see exactly what it is the fuck that I'm talking about. This right here, resistance, resistance, breakout, retest, green, red, green, bullish fucking uptrend. It happens all the fucking time, man. And you can use a green, double red, green as well. So that's when the bullish move will happen. And it's going to be fairly easy to determine, in terms of that overall bullish move. If it's just sitting above 655, forming all the higher support, and then it breaks above that resistance level, forming higher support, I would look to be buying calls at that higher resistance level on a break and retest above 656 for that move to 660, right? And then if we break above 655 and market drops back below 655, reacts bearish, then I'm in puts. Those are some of the most logical trade ideas that you can make heading tomorrow. They're the absolute best. Now, let's get into my last trade idea. So in terms of my last trade idea that I have for you, if the market reacts bearish at 655, there's going to be an opportunity to buy calls. And this is something that I want to bring a lot of awareness to. If the market does top at 655, there's a very strong likely outcome that it's going to try to reverse, and it's going to try to have a nice spike at a key oversold level for calls during later into the day up until the close, right? So again, if we're just selling off from 655 to 656, market's reacting bearish, we're dropping back down, daily chart looks bearish, past like 12 p.m., past 1 p.m., wait for confirmations at key oversold levels to try to buy calls. And you don't have to time this perfectly. You can buy one strike towards the middle of the day if you see confirmation, and then you could buy another strike towards the end of the day if we're at a lower level with confirmation as well. So in terms of this trade idea, it's going to be oversold dip buying opportunities for calls. The key time is going to be after 12:30 p.m. And the key times, just think about it like this. Think about it like this, like two brackets. The first key time is going to be from, 12:30 p.m. to like 2:30 p.m. The next key time is going to be towards like 3:15 p.m. to 3:30 p.m. right in between those range, right? In between those ranges, you do two brackets, and these are going to be extremely lucrative plays where you're going to want to go further out of the money on the call side, right? And both of the strikes should fucking print. If you're going to take the first one on the earlier idea in this confirmation, maybe don't go as far out. And then on the second one, go a little bit further out, right? These are all logical things you could do, especially with small accounts. But the point being is, it's going to be a very, very nice play to hit. Very, very similar in terms of what we had today with a massive bullish recovery into the close. If the market's selling off, you can look for a very similar situation at a key oversold level. So let's discuss the oversold levels that I'll be watching after like 1 p.m. and especially during power hour. These are going to be the levels. Right here, we have a break and retest, and the market has formed a lot of support at this break and retest. You can see right here, there was resistance at 652. SPY had a break above 652 to 653, dropped back down during the extended hours to retest, formed a higher floor, and now it's pushing higher, trying to retest those previous day highs. And like I said, within some time, SPY will be breaking above those previous day highs to 660. And our job tomorrow is to determine if it's, and our job today is to determine if it's going to happen, sooner than later. And I explained to you the most simplest way. The safest, simplest way is literally on the call side, if it breaks above 655, holds above 655, breaks above 656, holds above 656, forming higher support, get the fuck in on the calls. Then that's going to have the big fucking move. If it breaks above 655, drops back down, forms resistance at 654.50, then get the fuck in on the puts. If you just do what the fuck I said, it should fucking work. Just be a little bit cautious if you're buying calls at higher levels above 656 with confirmations, because the market can still have a pullback towards 657 to 658 zones. So just be a little cautious, and it's high and we're at all-time highs, but this move is expected to come within some time, right? But just be a little bit cautious in that situation, But if you look at trends, this looks very similar in terms of this trend, man. Look at this. Look at this overall trend, man. Like I'm saying, this bullish move could end up happening today, and we're going to determine that. We're going to fucking confirm that, and we're going to fucking bank. There's patterns, there's most likely outcomes, but at the end of the day, the most likely outcome is not going to be aligned with perfect timing all the fucking time. That's why we need to use confirmations, wait for the chart to develop, understand that we're trading on thin fucking air here at all-time fucking highs, yet we're still doing it extremely successfully. And it's been fairly predictable and fairly lucrative, man. I remember when the market was hitting all-time highs and we weren't doing as good when it was first happening. It took time to adjust. But man, it's like we really fucking figured this shit out and we've adapted accordingly, and it's been more predictable and lucrative than fucking ever. It's been fucking amazing, man. It's a massive improvement compared to how we, first started trading it when SPY was pushing for those new all-time highs in the 600s, So that's fucking amazing, man. The adoption and the improvement, the evolution. But yeah, these are going to be our oversold levels for calls, This wasn't tested during normal trading hours. So once we test this during the normal trading hours, SPY's going to try to pump. It's going to try to spike. It's going to try to pump. So this is going to be your buy zone. This is going to be your buy zone for calls. This is fucking amazing. So this is a great level for calls. With my strategy, it's very important to understand that when you see a strategy work, during extended hours. So right here, this is resistance, right? You could see there's roofs, there's big sell-offs at this levels. This is the breakout, and this is the retest, right? And now it's pushing even higher, right? So the key with this is, man, is the strategy, the break and retest strategy here worked and played out during the extended hours, which means it has a high likely outcome to work again once it's tested during the normal trading hours. I'm telling you, it's like the ultimate hack in the strategy. When you see a strategy play out in a level, right? So the level can form during normal trading hours. It can also even form during extended hours. And a massive overreaction recurs, like a big move to the upside. Once it drops back down and retests this level for the first time during normal trading hours, it's going to try to bounce. I'm telling you, it is the ultimate hack in the stock market. If you are not trading SPY, if you are not mapping out your levels using the extended hours chart, believe it or not, especially a lot of beginners, they don't have extended hours data. They don't even have it enabled, or they don't even understand the importance of it. Like I told you, one of the ultimate hacks that I figured out with trading SPY that has leveled up my trading a lot is understanding that extended hours levels can be phenomenal opportunities to get in during normal trading hours when you see a strategy play out or you see a big move play out. There's a lot of support at this 652, at this nice break and retest level, this oversold level as SPY is pushing back towards those all-time highs. So it's going to be a higher oversold dip buying opportunity to look to play calls. So that's going to be our first level to consider call options in between the range of 651.90 to 652.30. Now, in terms of our next level for call options, man, and just look at pattern recognition. This is another pattern recognition right here. You see how SPY's just forming all this support right here, has a big breakout. SPY's forming all this support right here, has a big breakout. Once it starts to go below that support a little bit, it has a very strong bullish recovery. And if you wanted to measure the move of that, it was 651.40 to 650.70. So we're talking about like a 70-cent drop there. So literally 70-cent drop from this level. And just looking at the overall chart, literally right here, 651.70 to 651.90, fucking golden zone, 651.40, all fucking phenomenal oversold levels to be scaling into those calls, man. So that's going to be our first trade idea for calls. That would be my main preference. One of my main preferences heading into tomorrow would be the oversold dip buying opportunity on calls. That's what I would prefer. Something similar, like yesterday, where it's just kind of sitting towards a key level into the close and then has a strong bullish recovery. Now, in terms of our next oversold level for calls, it's going to be, let's see. So if the first one's towards 652, we got some support at 650. I'm going to be going with the lower one. So the next level is going to be right here. 650.60. Market's going to try to bounce in between this range right here. This is going to be our next buy zone. 649.90, 650.30, 650.60. And again, don't nickel and dime the zones. Don't nickel and dime the levels. If you're seeing confirmations close to levels, you can get in slightly higher. If you're seeing confirmations below the levels, that's even better because it's more oversold. Never fucking forget that. And then in terms of our last level, this one likely won't hit at all, but this is going to be a phenomenal level once it does hit. Last one's going to be towards this 648.70 to 648, right? So if we do get the oversold dip buying opportunities, The best level possible is towards the previous day lows. The second best level, use confirmations, is towards the middle of the channel, 652. So losing's a personal choice. We will be green. We will be printing at the speed of light. And I'm telling you, we're going to fucking crush it, man. So like I said, within some time, and we're going to identify it very, very clearly, we will be getting a move like this on the SPY. You know, you see how it's just, you see how we have, look at this. This is what I'm talking about. Just look at the similarities, man. It's going to fucking happen. Look at this. We have this, man, gosh, look at this, man. For those of you who stayed to the end, you really get rewarded with the best information, man. Look at this. Bullish patterns. Green, double red, green, breakout. Green, red, green, breakout. Starts to downtrend slanted. Starts to downtrend slanted. Starts to break out. Goes back down to previous day lows. My gosh, I'm telling you, another good opportunity. Whew, with this fucking pattern I'm looking at. My gosh, man. Wow, what a beautiful break and retest right here. We were smashing calls on this. Look at this. Resistance, overreaction to upside, retest, green, red, green, bullish uptrend. Fucking magnificent. So, anyways, man. In terms of this situation we're looking at, look at this trend, man. Very, very similar. Bullish pattern, breakout, breakout, slanted downtrend, recovery into extended hours, breaks above previous day highs, recovery into extended hours, attempting to break above previous day highs, and then once it starts to form those lower highs and reacts bearish, it drops back to the previous day lows. Bullish recovery, ultimate massive upside move. Look, man, if you want to take a fucking swing at previous day lows, fucking go for it. If you want to fucking go for a swing trade, for those of you interested in swinging calls, you know, towards upper 651 to 657, you can scale in right here at 651.90, and then you can add at 659, swing those fucking calls. You know, if you're going to swing it, you get in towards the higher level. You don't fucking miss out on a swing because of a 1.5 pullback. You're fucking swinging it, man, for a massive fucking move. Look at this. And then within some time, it fucking breaks out and goes above those all-time fucking highs, right? So it's either going to do that, what I just showed you. It's either literally going to do that, push above previous day highs, drop back towards the lows, bullish recovery for swing trade, or it's just going to break above the previous day highs, and if it holds above it, massive fucking breakout, and then it fucking drops, right? And then in terms of measuring where the fucking top is on this fucker, 650 to 654. Look, we'll say 654.80. Oh yeah, 4 points. Fucking automated buy puts, 659.50. Above 659, automated buy puts. Automated buy puts even look to swing puts. My gosh, that's it, man. We just had the breakthrough. That was the breakthrough. For those of you who just stayed to the end, you got the breakthrough, man. Yeah, I mean, if you watched the beginning of this video, you were well aware. I just kept on mentioning all the bearishness and all this shit. I'm saying, dude, with the shit I just fucking discovered, like I said, sometimes when I make the videos, you know, I'll have some preparation beforehand. And then as I'm just talking about what I saw beforehand, as I'm just looking at the charts, I'll keep seeing more and more fucking patterns. Like, dude, I'm doing this shit literally. I'm literally just looking at the chart and explaining I'm creating the game plan on spot. That's what you need to understand. Every video I make, and sometimes you could tell if I had, you know, more preparation beforehand, but for the most part, like literally 80% of the game plan is just me creating it on spot. And then we have these massive breakthrough moments. Like, it's kind of cool in that sense, because you kind of get to decode and see like how I come up with this stuff for the most of it, you know, and like how I'm figuring this out and just how I kind of see the markets, right? And then, you know, you'll see at times, sometimes I'll have some preparation before the video where I already looked at the chart, I already looked at the daily chart, I already looked at this stuff. But man, like that's the cool thing about this. When I'm making the game plans just raw on spot, you'll see like my mind go in different places and stuff like that. And then it comes to this in certain game plans, it comes to this like major breakthrough point. I'm like, wow, this looks fucking sick. I can't wait to trade tomorrow. So that's it, man. I just gave you that. We're going to fucking kill it, man. I'm very excited to trade today. We're going to fucking kill this, man. Oh my gosh, the ideas I've just given you. And man, for those of you who watched last night's game plan, what the fuck did I say, man? I literally said, If SPY, I said this, go back and watch the video. This was one of the trade ideas. This was a rare trade idea. And I just gave you the most rarest trade ideas for fucking swings and day trades towards the end. Oh my fucking gosh. For those of you who stay to the end, you're going to be making some serious money. But listen, man, in last night's game plan, I literally said if SPY hits 655 and we have a massive gap up, overreaction to the upside, we're buying calls at the gap. As soon as the gap filled and it hit this key extended hour support where we had massive breakouts for the first time during normal trading hours, we had a strong bullish recovery. I literally said we're playing SPY for a gap close reversal. If it has a massive fucking pump to 655 and drops 5 points right back down to fill the gap, literally with no time left on the shot clock, we're buying calls. I literally said that in the game plan. That was a rare trade idea towards the middle to the end of the game plan, man. So those are the fucking game plans. Here, I'll give you another rare trade idea. If we go to 657 to 659 zone, right? And we drop to 652.21, buying calls for the gap close reversal again. My gosh, so much opportunity for day trading, so much opportunity for swing trades. I gave you the swing trade opportunities. I gave you the day trading opportunities. We are going to fucking print, man. Man, I'm looking so fucking forward to this, man. I literally just created with that pattern that I saw, literally just like 3 fucking new game plans. My fucking gosh. We are going to print at the speed of fucking light. Man, for the fucking people who clicked off in the first 10 minutes and just got that bearish thesis, they fucked up. They really did fuck up, man. There's so much fucking more to this shit. So, like I said, it takes time, man. I read the market. This shit takes time. I cracked the fucking code within the videos. You saw the breakthrough happen, man. You saw it. Now I'm fucking ready to go, man. I'm fucking ready to fucking conquer the market. With that being said, man, we're going to kill it. It's the first link down below if you want to trade alongside us. I can assure you we are going to close out this week very, very strong within the green. Now, let's get into the trades, man. So, in terms of the trades, man, as you can see, inside of Team Roar, you gain access to a real-time zero-date options trading alert system that is making a fuck ton of traders $500 to $1,000 a day. Inside of Team Roar, you're gaining access to multi-millionaires who are consistently making tens of thousands of dollars every single week trading far the money zero-date options. So in terms of the overall trades, I'm going to break down the trades here. Let's get straight into the analysis. So as you can see right here on September 10th, the first trade of the day, this was a break even. 650 SPY puts, 35 cents. They went to 38 cents twice, to 40 cents twice. And then they just kept dropping back down worthless, right? So this was a break even trade. Wasn't really a win, wasn't really a loss. That was a break even. So didn't really count in a sense. Now, in terms of the second trade, 12:23 p.m. First trade was break even on puts. Look at the improvement when we keep on trading, right? As we keep on trading, we tend to improve and get better. That's why it's not over trading. So 652 SPY puts, and part of the reason behind that is because we've had experience on the trading day. And if you have experience trading on the day, you should continue to improve for the most part. And also the chart is more developed. It's easier to trade if the chart's more developed. That's what I recommend for beginners or for people who are just not profitable in general. Just wait for the chart to develop and wait for the best levels to hit with the best confirmations. Wait for the most rarest opportunities, man. Wait for the most rare, sacred opportunities to come into fucking play, man. So with that being said, 652 SPY puts for 45 cents a contract at 12:23. So you go to 652 SPY puts, you go to 12:23 p.m., you're going to see right here, this is where we ended up getting in. So this trade went to 150 cents a contract. It kept on bottoming towards our initial entry and it kept on pushing higher within time. You could have literally scalped this put all fucking day, rinse and repeat, and just fucking banked. You could have left runners, sold the runners, deep in the fucking money for 200% at 150. With that being said, 45 cents to 150, 12:37 p.m., adding. We add to the winners to double the position size. If you add to a loss, you can lose more money and it might not come back to life. If you add to a winner, you get profit stopped out because you set the profit stop. It's impossible to go to green to red. And you can keep on winning and you can double the gains by doubling or tripling your position size, triple the gains. So we ended up adding at 12:37. You go to 12:37 p.m. So this is where we got in. This is where we added. As you can see, it quickly went from 50 cents to 70 cents. You should have been profit stopped out. And you should have left some runners for 150. And then you could always get back in It ended up dropping even lower. This happens all the time, man, where we get on a play, it goes up 50%, 100%, then it drops lower, then it pushes higher. It's so normal, especially for far out of the money zero-day options. It's so normal for them to drop lower before they push higher. That's why you need to set profit stops, leave runners, and you can always look to get back in and scalp these fucking dips for bigger profits, right? Because they tend to push higher within some time on a lot of our trades as we're trading the trend. So that's a massive fucking win. That's success. That's green enough to walk away, right? 50 to 70, and you add to the win, means you double the gains, you're green enough to walk away. If you choose to keep on winning, the most you risk is 25 to 50% of your realized gains. Because when you're green enough to walk away, you should stop trading for the day, especially if you have a small account. But if you want to keep on trading, the most you risk is 25 to 50% of your gains. And if you're in a situation where you can tell, if this trade expires worthless and goes to zero, then I'm gonna exceed losing more than 50% of my profits. Don't put yourself in that situation. The contracts tend to be 50 cents a contract or lower, right? SPX is typically 100 or lower, right? So you know the risk beforehand, and you can get started with one contract, and with every contract you can make multiple 100% profit returns to 1,000% plus returns, right? Set the fucking profit stops. Green to red is a choice, and you add to winners to double to triple the gains. It's a way to take on extra risk and bigger gains and bigger position sizes without really taking on that extra risk, because it's impossible to go green to red if you set a profit stop. So add to the win, set the profit stops. Now, next trade, 6/5/20 SPX puts at 1:25 p.m. So you go to 6/5/20 SPX puts right here at 1:20 p.m. Take a look. You're going to see right here. Very similar to the last trade we just made. 6/5/20 SPX puts for 165 at 125. You go to 125 right here. As soon as we get in, 2 minutes later, this went from 220 all the way to 295. Set the profit stops, you get profit stopped out. Profit stopped out in the 280s, right? That's a nice little win there. And then leave runners, or you can get back in. And then as you can see, it went a little bit lower, then it pushed higher. It went all the way to 700, man. Losing's a personal choice. The reason why we say losing is a personal choice, because on the vast majority of our trades, they quickly go up 30 to 50%. You set profit stops, you add to winners, you double the gains, you get profit stopped out. And then you leave some runners for the bigger move. And then they tend to even drop lower before the bigger move, where you can add back more because you just sold for a profit, right? And doubling the gains, increase your profit by a buck ton, by doubling the position size, And this is what you can do. It's just unlimited fucking win, unlimited fucking printing. You can sit here and scalp the fucking dips, sell the fucking rips, leave some fucking runners, sell deep in the money, get profit stopped out on the fucking bulk, man. It's all a fucking choice. Losing is a choice. When the trade is consistently going up 50%, you're setting profit stops, getting profit stopped out, and the trade's pushing lower, but you're not getting stopped out because we don't use stop losses. The most you put in is your max risk per trade. When you add to winners, not to losers. The most you're putting in is your max risk per trade, right? One way to increase your gains in a safe way by adding on an extra 1 to 2 R multiple is your max risk per trade by adding, to winners is by setting profit stops. If you add to a winner and set a profit stop, it's impossible to go green to red. So losing's a personal choice, man. No matter fucking what, the trades come back to life and they push fucking higher a lot of the fucking times. It's all a choice. Just don't use stop losses and set profit stops. You're going to fucking love it. So with that being said, in terms of the next trade, as you can see right here, this was fucking phenomenal. This was absolutely fucking amazing, man. Look at the gains, man. Look at the fucking results. 310, 652 puts went in the money. Fucking printing at the speed of fucking light. Sold at 2:28 p.m. You go to 2:28 p.m., man. Look at this. Look at these fucking plays, man. This is fucking insane. 2:28 p.m. So you go to 2:28 p.m. You're gonna see right here. Let's go to 2:28 p.m. This is literally the exit on that into the 370s. You seen this? This is where we got in, and then this is where it goes to 370. This is where we're getting out the exact fucking peak, right? You go to sold 2:28 p.m. You go to 2:28 p.m. right here, fucking sold the fucking peak before it pushed lower below the entry. Then it went even higher to fucking 800. It's like, dude, no matter what the fuck you did, losing was a fucking choice. So with that being said, absolutely phenomenal trade. 165 cents to 4.20, 260 fucking percent, right? So yeah, that's fucking amazing. That's what 420 is to us. Massive fucking gains. That's what it is to us. So with that being said, 45 cents to 93 cents on 652 puts, 100% return right there. Losing is all a choice, and again, we're adding to these wins, which double the gains, right? So it's massive fucking gains. So with that being said, in terms of puts, you're going to see right here, we had these 650 SPY puts for 35 cents a contract. And in this particular situation, this was a play that was actually added. This was actually added to the fucking L. This was added when this dropped to 23 cents at 3:09 p.m. This was actually added to a loss, and then it was sold. This was sold into the mid 30s. So that was actually a nice fucking win. I was too busy. I didn't even see that one. I was too busy buying fucking calls, man. I had 2 insane fucking plays on calls, and I had the perfect thesis. It just took 2 fucking long to play out. So 2 of them were losses, but then the other 2 were nice wins. So it kind of balanced it out. It kind of balanced the crazy fucking day out. That could have been a big red day for me. So it's a good thing I had those wins. But yeah, so this one was at literally, this trade right here, 650 SPY puts at 35 cents. It dropped 20 cents and added to a L, added, tripled the position size at 20 cents, and then it went back to the initial entry. So since the loss was averaged down in that particular situation, that was a very nice win, especially if you triple the position size. So that's actually 4 massive fucking wins on the day. And then look at this final fucking trade for the day. 6/5/30 SPX calls for 180 cents. This is the power hour trading session. During power hour, you buy these SPX cheap low risk plays. They can literally go 300, 500%, 1,000% plus. Every single week, we're hitting 1,000% returns on these. Look at this. 6/5/30 SPX calls for 180 cents at 3:44 p.m. You go to 6/5/30 SPX calls, you're going to see right here, man. Look at this fucking trade. 3:44 p.m. You go to 3:44 p.m. right here. This is where we got in, literally towards the fucking lows. Consolidates. 200 to fucking 700, man. Fucking insane. Look at that. 180 in the money, 400 instantly once it goes in the money, 700. You see in these fucking plays, man, look. Who do you know is consistently winning that fucking much? 4 massive fucking wins. One of the trades dropped 50%, tripled the position size into a loser, sold for a fucking win, man. Losing is a personal fucking choice. Even when you're down 50%, the trades are coming back to life and going in the fucking money at the speed of fucking light. Look at the fucking results. Who do you know is winning this much, printing this much every single fucking day, man? Big shout out to G-Roar for absolutely fucking crushing it, man. I'd love to see it. The fucking results today were fucking phenomenal. In terms of my trading day, it could have been a lot better. It could have literally been a day where I could have gotten shit fucking rich, man. I could have made tens of thousands if I just did things a little bit differently. But I learned from that. I'm going to be explaining the mistakes that I learned from that. But this day could have also been a lot worse for me as well. It's a good thing that I had 2 of these trades work out. But I took a lot of trades on calls. 2 of them didn't work, and the other 2 did work. And the 2 that worked were massive fucking wins. So it balanced out, and I added to the wins, but I also added to the L's as well. But like I said, overall it balanced out. But if I played my cards just slightly differently, my gosh, I could have easily cleared multiple 5 figures on this situation. So I'm going to be explaining to you the mistakes on this. The main mistakes I made was over leveraging and not spacing out accordingly. And I'm going to be discussing this towards the end. So in terms of my trades, let's go to, September 10. I'm going to walk you through this here. So, let's get straight into this, let's see. So if we go to the trades, let's see. So, 652. So 653 calls. This was the first trade. It was very, very cheap. It was very, very low risk. I only added it to once. So this was a fairly small L compared to the wins. So that's good, man. So this was the YOLO that was extremely far out. That ended up being extremely far out. That did not work out. First trade on the day for me on the personal trade was an L that I alerted. Next trade, this dropped 50%. I averaged my cost down. Same thing that G-Roar did. His trade dropped 50%. He averaged his cost down. Came back to life, sold for a win, just like he did on puts. I did the same shit with fucking calls. 652 calls at 80 cents. When it dropped to 40 cents, I ended up adding to that, and it averaged the cost out, right? With that being said, I added at 87 cents on that. And then as it was dropping, I added at 63 cents on that. And a lot of members ended up getting out in the mid 70 to 80 cent range once it came back to life. Like I said, it dropped to like 40 cents, came back to life to 80 cents. That was a nice fucking win. So it balanced out, right? That trade on 653 calls should have been a fairly small loss because we fucking quadrupled our position size on 652 calls. And if you average your cost down like we did, your average should have been in the 60s and it went to 80. So 60 to 80 is a fucking massive W on a play where you quadruple your position size, right? So in terms of the next fucking trade, 6-5-35 calls. So if you go to 6-5-35 calls, this particular situation, this was a nice quick win, as you can see right here. 6-5-35 calls, 1:56 p.m. You go to 1:56 p.m., 1:56 p.m. right here. This went from 320 to 480 within fucking minutes. 320 to 480, that could have been a nice win for you. So in terms of the particular situation, let me get into the next trades in terms of that particular situation, right? And we did scale into that and it did push higher. So it could have been a nice win for you if you set the overall profit stops. Now, in terms of the next trade, 6-5-30 calls at 4.30 cents. So in terms of 6-5-30 calls at 4.30 cents, if you go to, you're going to see right here, 2:23 p.m. You go to 2:23 p.m. You're going to see right here. This is 2:23 p.m. Buying calls at the lows at 400. And then in terms of adding to this play, you're going to see right here, 6-5-30 calls ended up adding at 350 cents, quadrupled the position size. Again, taking massive sizes on these calls. All of the plays I took massive position sizes on went up at least 50%. So if you set profit stops, you should have been banking on that, especially if you're adding and taking on big risk. You need to be setting profit stops because you do not want to go green to red on a trade that you're doubling your position size on, even if it goes up a smaller amount, like 30 to 50%. Remember that and set the profit stops when you're up 10% plus. So added at 350 cents at 229. This is where I got in. This is where I added. And then as you can see, this went from 327 all the way to 560, nearly 100% profit return, right? So you got to set the profit stops. You got to sell at the speed of light. You got to get profit stopped out quick. Use the right brokers because the trades can go down just as fast as they went up or even quicker, right? So with that being said, that was another nice play. Now, in terms of this trade, this was the second L. 6-5-40 calls did not work out. They almost went in the money. Unfortunately, it did not go in the fucking money. I was very fucking confident on that one. That was my bigger L on the day. I was so fucking confident in those, man. They were only like 100 cents. I thought I was going to print like fucking crazy. But if you average your cost down, you could have potentially won on that because they dropped a fuck ton and then they came back to life. Sometimes members wait a little bit to get in at a much lower price than we do, especially if they have small accounts. But anyways, man, that was my bigger L because I went fucking heavy on that, right? And in terms of the overall trades, those were the main overall trades on the overall day. Those are the main overall trades, man. But look at this, man. So my overall thesis was a bullish close. I was looking for a bullish close, but I was getting in so early, man. I was getting in like at 2 p.m., 2:30 p.m. Like on a bullish close, we're looking to get in past 3 p.m., ideally after 3:30 p.m., right? So the biggest mistake I made was just over leveraging myself and taking position sizes of too big and just scaling in too heavily on multiple strikes too early, right? So for those of you with medium-sized to larger accounts, what I would encourage you to do is spread out the trend at key times, right? So key times are going to be the market open into the close. There's some crazy killer plays with perfect timing and situations towards 2:30 p.m. So think of the key times like this. Market open, there could be one trade, middle of the day, not as big as gains. And then a rare time where you can make some crazy fucking gains is 2:30 p.m. And then after that, 3:30 p.m. So what I'm telling you is, if the trend's bullish and you're looking for a bullish close and it's at 2 p.m., take like one strike. Take one strike at 2 p.m., 2:30 p.m., and then during power hour at 3:30 p.m., take another strike and size in a little bit bigger on that strike as well, right? Avoid going over 3. Avoid three plus strikes and space your strikes out, especially if you're doing 3 strikes. But and even more especially if you're doing 2 strikes, right? Space your strikes out. So if you're trading the trend, you buy calls, it drops 50% right away. Give it some time. Don't just get in right away on the second strike because it dropped 50%. Unless you're getting the best confirmation after a new 30-minute candlestick has opened up and the previous one closed, that's a rare exception, right? But typically you want to give it some space, give it some time, man. So just think in terms of brackets, 2:30 p.m. is a bracket. Take one strike. If it doesn't work out, hold it. It might come back to life. You might print on that, right? Next key time, 3:30 p.m. 3:30 p.m. Look to add to the winners, right? Add to the winners at 3:30 p.m. So space things out, 2:30 p.m., take a strike. If it doesn't work, buy another strike at 3:30 p.m. and then add to the fucking winner. That's what you're going to want to do. Think in 2 to 3 strike brackets, right? If you have a small account, 2 strikes at most. If you have a bigger account, just think 3 strikes, but spaced out. Market open, 2:30 p.m., 3:30 p.m. Main key times you're going to see me trade, 11 a.m. to 11:30 a.m., 2:30 p.m., and 3:30 p.m. Mainly 11:30 a.m. and 3:30 p.m. Those are the best times where I trade the best. But there is rare opportunities where it does make sense, if you're bullish or bearish on an overall close, to consider a strike at 2:30 p.m. And then if you don't time it right, it still has high odds of going in the money and printing anyways. And then 3:30 p.m., you get back in on that second strike, and then you start adding like fucking crazy and print like insane, man. So this could have been a massive day for me. I could have made multi-5 figures. It could have been a very massive day. But it wasn't, because I made too many trades and I over leveraged myself and I took on too much risk. It could have been a massive fucking red day. I was literally risking the entire week's gains. That's just how confident I was in on that. And another point that I want to make with this is, guys, don't take big risks, man. I over leveraged myself. I took big risk and it actually cost me a lot of money, because if I would just had waited and spaced things out more accordingly with my position sizes and with the strikes, rather than just being so fucking confident that this play is going to fucking bank, that I'm going to be right, space things out, give yourself some space with the timing, give yourself some opportunities with the confirmations, add to the winners when things are working out rather than adding into the losers. I really put myself in a situation where this could have been a big red day. It really could have been. It's a good thing that, SPY had this crazy bullish recovery from 650.50 all the way to 653, So my incompetence of not spacing out and over leveraging myself and adding like fucking crazy to losers cost me a fuck ton of money, man. A fuck ton of money. It really did, man. Because in this particular situation, I could have just bought fucking calls. I mean, G-Roar, he called it out fucking perfectly. He took the same strike as me. He just did it at a later fucking time, which is fucking amazing. So I could have been in a situation like this, where just smoothly buying calls at 180 cents at the perfect time after 3:30 p.m. and then just adding smooth fucking right up. But I did the inverse. I over leveraged myself. I added into losers. So again, avoid adding into losers. Never over leverage yourself, especially when it comes to losses. Don't go adding to losers. We're already holding these plays to fucking zero, right? Losing 100% max or max risk per trade. So avoid adding to losers, because it's going to increase that max risk per trade and it's going to increase the fucking losses, right? And you're going to miss out on opportunities where you're going to be so fucking over leveraged and the market's going to, fuck with your balance, right? If you're off balance and you're sized in too big, you're not going to be taking size at the best time possible if there's a play at 3:30 p.m. because you're already exposed to too much fucking risk where you're just trying to balance out. So for me, this was more of a day where I kind of just balanced out rather than having a massive fucking green day like I was fucking anticipating. So for those of you with medium-sized accounts, I mean, the biggest takeaway for a day like this, do not add to losers. It's going to over leverage yourself and you're going to pass up on opportunities where it's the perfect time to get in, or you're not going to take that next strike because you're already so scaled into the losers. So avoid adding to losers and space out your trades. If you buy a strike at 2:30 p.m., a key time of confirmation, and it doesn't work out, wait until 3:30 p.m. to buy the second strike, and don't go adding to losers in between. So what I should have done was I should have spaced things out a bit more. And instead of fucking quadrupling down on these fucking losses, I should have just added to the loss once. And again, if you do add to a loser, space it out, wait for it to drop at least 35%, 40, 50% plus, space things out and give things time, because something better can arise at 3:30 p.m. Know the key times, man. Within those key times, 2 p.m. to 2:30 p.m. session and 3:30 p.m. session, I went wrong by buying way too many strikes, 2 to 2:30 p.m. session, and scaling in so fucking heavily, literally tripling and quadrupling my fucking losers, right? where it cost me so much opportunity, the opportunity cost of fucking doing that. This was the opportunity cost. The opportunity cost was I ended up with a well-balanced day where I could have literally just bought one strike towards the fucking lows at 3:30 p.m. and added to it and made a fuck ton, man. But instead I had a balanced day where there was 2 wins and 2 losses, you know, and it was hell. It was a rough time holding fucking through that, man. A lot of people didn't believe that the play was going to come back to life. A lot of people did believe that it was going to come back to life. I saw a lot of people hold it, you know. We wrote it out and it ended up being a balanced day. And then a lot of members, they bought calls when G-Roar bought calls, and they also bought at 3:30 p.m. because I gave clear analysis, you know. I gave clear analysis that this was going to come back to life. This was going to print. This was going to come back to life. Literally at 3, this was I gave clear fucking analysis, you know, but I put myself in a dangerous situation, but I knew the risk. The risk was the entire week's gains, which was a fuck ton already. I was just so fucking confident, man. You know, don't let your confidence put you in high risk situations that don't make sense. You know, high risk situations that don't make sense, buying a lot of strikes in the same period of time doesn't make sense. Space it out. Adding to losers, you know, heavily doesn't make sense. Buying multiple strikes and adding to losers on multiple strikes doesn't make sense. I was doing all those things and it worked out. You know, it ended up panning out. It's just, I really fucked up because I could have made so much fucking money if I just did things slightly fucking differently. So I'm giving you the keys. I shared with you my mistakes, and I'm also giving you the keys on how to really do this the proper way. Normally I don't do this, but man, my confidence lately has really been fucking getting to me, man. I've just been so fucking confident that all the plays are going to fucking print. But this was just a situation where I really did fuck up because my thesis worked out, but I over leveraged myself. And the problem was I didn't have enough size at the perfect time to have such massive great green day. Like I was literally trying to pull multi 5 figures on this, but I got in too fucking early and over leveraged myself. So it was more of a balanced day. The good thing is it could have been a very fucking big red day where I get back all the week's gains. So it wasn't that. It was in the middle, you know? But if I would have just done things a little bit differently, not add to losers, space out the strikes, save some size where I feel comfortable taking the size, you know, at 3:30 p.m., it would have been a massive green day. You know, I had the capital to do it, but I already exposed myself to too much risk and I didn't feel comfortable. You know, I had four fucking strikes before this, man, just waiting for this fucking thing to come back to life. And I added to all the fucking losers. I'm saying, dude, I already put on my max risk for the line. So that was my biggest mistake, man. Do not put your max risk on the line at 2:30. Save some for 3:30. Space it out. Risk half at 2:30, risk the other half at 3:30. And then again, this gets more complex. You know, sometimes things are going to tell you to wait until 3:30 p.m., risk more then. It gets more complex. It's not as simple as this. You know, each day is different. So with that being said, man, I gave clear analysis to hold, and I made it very, very clear that 3:30 p.m. was going to be a bullish overall close and trend day. That's the key time, you know, for calls. I made that very, very clear. You know, if you go back throughout the chart and throughout my analysis, see, it's not going to spike until 3:30 p.m. You know, when you hold enough, just put it this way. When you trade enough on a day and you take multiple strikes and you're losing or whatever the fuck you're doing, with enough trading experience on the day, you start to realize and know what's going to fucking happen, right? Especially as the chart develops. Easiest way to trade is just wait for the fucking chart to develop. Wait for the perfect confirmations. So listen, man, our group's taking off. We're at all-time highs. Everyone loves the group. Nobody's leaving. Nobody's canceling. I've tried my absolute best to get them to cancel. They're not fucking leaving. I tried everything I fucking could, man. I tried to get them to cancel in the most respectful, competent way possible by just winning non-fucking stop and giving everyone the best fucking trades like G-War and I have been doing. You know, we've tried our absolute best to get people to just push them away and to fucking quit if they're fucking losing money, because it's like, dude, we're going green every single fucking week. Losing's a personal choice. If you're broke, don't trade. If your account's that small, don't fucking trade. We are green every single fucking week regardless, right? We've tried our absolute best. Nobody's canceling. Everybody's fucking staying. Everybody loves the group. I absolutely love trading alongside you guys. It's the first link down below within the description if you want to trade alongside us, man. I'm telling you, losing is a personal fucking choice, and it's always been a personal choice, you know? Even today, losing was a personal choice, but I could have made a lot more if I made some different decisions. But losing still ended up being a personal choice because we had a strong bullish recovery, and that's what I was doing. I was playing for a strong bullish recovery. Problem was, it's not even that I got in too early. The problem was that I didn't get in too early. That's not an issue. What you need to understand is If you buy calls at 2:30 p.m., it doesn't matter if that strike's too far out and it doesn't work at the close, because you need to think of brackets. You take one strike at 2:30, it doesn't work out, okay. And then you take the next strike at 3:30 and it's going to go up at least 200% plus, and you're going to add to the winners. You have to understand, you can be extremely successful trading the way we trade with a win rate as low as 33%. It's the strongest foundation for you to be successful trading. So our group's at all-time highs. We're killing it every single fucking day. I mean, I don't think you can name a single fucking person on the fucking planet who's given the trades that I've given, and with the analysis on the bullish close and G-Roar's fucking amazing fucking trading performance. Like, we're fucking killing it, man, every single day. You need to get in here. It's September. This is going to be one of our greatest trading months in fucking history. You need to join right now, man. It is the first link down below in the description. I can assure you, we are going to close out this week very, very strong within the green. And I would highly recommend that you join the group right now. We trade cheap, low risk, far out of the money, 0-to-8 options. We're known for selling them deep in the money for the biggest percentage gains. We put in our max risk per trades into the trades, and we avoid adding to losers. The most we lose is our max risk per trade, what we put into the trade, right? Contracts typically priced at 50 cents a contract. We trade SPY before 3:30, and then after 3:30, we trade SPX. Take the SPX YOLO's biggest percentage gains, cheapest, lowest risk, right? We got an amazing community, secure private network, and it's the first link down below in the description if you'd like to trade alongside us. No stop losses, hold the plays, 7 out of 10 times the dead plays that drop 70% plus. Come back to life and go fucking green. You literally witnessed it and saw it with the call options today as we had the strong bullish close. And, add to winners, set profit stops, move the profit stops up higher to ensure that you don't get back the bulk of your gains. Look, man, join the group. Join our group. You're going to love it. It's the first thing down below in the description. If you're a real fucking trader, no questions asked, join the group. It should be a genuine requirement for anyone who's trading within the stock market, who's actually fucking trading, not being a degenerate, not fucking gambling, not treating like this, oh, this is just a fun, friendly game. Let's just try to make some money. No, this is real fucking money, real fucking risk, real fucking multi-millionaires printing at the speed of fucking light, real fucking experience, fucking decades. This is, if we're good enough to buy the low, we're good enough to sell the fucking peak. We're the fucking best. Join the group. If you want to print money at the speed of fucking light, that's who this is for, man. Get in, you're going to level up, you're going to trade alongside the best. That's how you become a better trader, by trading. And if you trade alongside us, well, you're going to experience things you never experienced before. You're going to learn things you never learned before, because the way we trade is the complete opposite of how everyone else trades. Do you understand, man? Every single fucking person in our fucking niche, in our fucking industry, they don't want to know we exist, because if people knew we exist, they would be able to clearly tell that if trading is for them or not. So many people are scamming fucking traders out of their money. They're not even real fucking traders. So many people are just fucking educating. Like, dude, this industry doesn't want people to know about us, because if people knew about us, they'd be like, oh shit, this is a real trading group. Most people, they'd realize, oh shit, this is real. And for the ones who lose money, they quit, because they'd be like, dude, these guys are winning every single day and I'm over here losing money. And then they fucking quit. They blow up their account. But for a fuck ton of traders who trade alongside us, our format works. The same faces have been around for 2+ years. And they're making $500 to $1,000 a day. And we got a couple multimillionaires in here. And I'm fucking telling you, man, it's unlimited winning. It's unlimited fucking printing, man. That's what I'm saying. This industry literally they don't want us to be known. They don't want us to be known. They don't want people to know about us, because we're so fucking real. When you're so fucking real, everyone gets exposed. Everything around you gets fucking exposed. That's why people don't fucking talk about us like that. Because I'm telling you, man, when you have something fucking real, it exposes everything and everyone around you. And a lot of people, they don't like that. People don't like seeing their flaws, seeing their mistakes, seeing what's real, seeing what's fake, seeing how good our fucking trades are. And then people comparing to other people's trades, like, oh shit, there's no fucking comparison. And that brings in big fucking competition. That brings in, oh shit, that person's out of fucking business. These guys are charging a fair, reasonable fucking price. Why would I join their group when this group's the fucking best? That's what I'm fucking saying, man. Like, it's unlimited fucking winning. It's unlimited fucking printing. If you want a real trading experience, I'm telling you, it should be a genuine requirement for a real fucking trader to join Team Roar and see if the format is for them or not. And you should know within the first 3 months. You should be able to know and see it. You come in here with a clear signal, no distractions, no bullshit. You put the time in, you put the work in. You should know within the first 3 months if this is for you or not, man. And you should be able to get results at the speed of fucking light, especially if you have some experience trading. So if you want to learn how to trade, how we trade, you trade alongside us. You're going to learn, you're going to grow, you're going to compound your account, you're going to print money at the speed of light. Is the first link down below within the description. We're going to absolutely fucking crush it today.